Well, here we go again. Another round of tariffs, another ripple effect on the economy, but this time it's not just Wall Street or the big corporations feeling the heat. This could hit you right where it matters most, our Miami real estate market. President Trump has just signed off on new tariffs. Tariffs are taxes on imported goods that can affect everything from cars to kitchen appliances. But what if I told you that these tariffs could make your home in Miami more expensive, slow down new construction, and even change the way people buy and sell real estate? Whether you're looking to buy, sell, or invest in Miami, these tariffs are probably going to shake up your plans. Are we headed for a construction slowdown, a seller's market, or something even worse? Let's break down exactly what's happening, how it affects you, and what you can do about it before it's too late. Hey everybody, I'm Biscaha, your Miami real estate advisor, and starting with the basics, let's talk about what exactly are these tariffs and why you should care. A tariff is basically a tax that the government places on imported goods. And when companies pay more to import materials, they don't just eat the cost, they pass that down to you, the buyer. Now, President Trump has placed a 25% tariff on imported steel and a 10% tariff on aluminum. That might sound like a problem for car manufacturers or beer can producers, but here's where it hits home. These are the same materials that builders and developers use for high-rise condos and single-family homes across Miami. So what happens when you have to pay more for materials? Well, you guessed it, higher costs get passed along to buyers, and that is just the beginning. Now, the reason behind these tariffs is simple. At least according to the Trump administration, the goal is to protect American industries by making imported materials more expensive, giving US companies a chance to compete. But as we'll see, the reality is a little more complicated, because when you raise costs on something as fundamental as steel and aluminum, you don't just affect the companies selling it, you affect the entire economy, especially industries that rely on those materials, like the housing market. So if you're wondering whether these tariffs actually help Americans or just make home buying more expensive, then stick around, because in the next section, I'm going to be talking about real impact on the Miami real estate market, and trust me, it's not pretty. All right, let's talk about the real world effect of these tariffs, because this isn't just theory, this is already playing out in our Miami housing market. Steel and aluminum are core ingredients in Miami's construction because they're used in everything from luxury high-rises to those affordable housing projects. And with tariffs now in place, builders are facing a major financial squeeze. Materials alone make up more than half the cost of building a new project. So when those materials go up in price, the cost of the entire project goes up fast. According to the National Association of Home Builders, tariffs could add more than $9,200 to the cost of a typical new home. But in Miami, it's already hitting harder. John Paul Perez, who's the CEO of the Related Group, Related is one of the biggest developers here in South Florida, guys, says that contractors bidding on their projects are already increasing their prices by as much as 20% just to brace for the uncertainty. We're seeing subcontractors throw in additional cushion into their numbers, anticipating tariffs. It could be as much as 20% depending on what material they're getting from another country. This is preemptive pricing. Contractors aren't reacting to the costs, they're anticipating them and adding a buffer to protect their margin. Well, that buffer is something that you're paying for whether you're buying a condo or renting an apartment. And here's the kicker. According to Perez, when you dig into the numbers, that extra cost, it's not always real. Like I said, it's protective padding, but that still means higher prices for homes, higher costs for developers, and slower development timelines across the board. And it's not just materials. Related founder George Perez warned that immigration crackdowns could make the situation even worse because South Florida's construction industry depends heavily on foreign labor. He says there will absolutely be a cost effect. Losing these people will have an inflationary effect. Translation, with fewer workers available, construction slows down, wages rise, and once again, you pay the price. So if you're wondering why that pre-construction condo in Brickell jumped in price, or why your favorite midtown rental is $400 more a month than last year, this is why. These tariffs are already creating friction in the system, and that pressure is building every day. Now let's unpack how this directly affects you, whether you're trying to buy, you're thinking about selling, or you're just watching the market, because make no mistake, this isn't just about politics, this is about your wallet. All right, let's cut to the chase. If you're buying or selling a home in Miami, these tariffs directly affect you, so let's break it down. If you're a buyer, you already know Miami real estate isn't cheap, but thanks to these tariffs, tariffs, we're seeing construction slow down, which means fewer homes hitting the market. And when the supply is low and the demand is high, prices go up. That means if you're waiting for home prices to drop, hoping for a magical buyer's market, you're probably going to be waiting a long time. And let's not forget about mortgage rates. If inflation rises because of these tariffs, the Federal Reserve could respond by raising interest rates, which means that the cost of borrowing money for a home, it's also going to go up. So if you're on the fence about buying, now might actually be the best time to lock in a deal before prices and interest rates climb even higher. For sellers, this might be your moment. If fewer homes are being built, that means that your existing home is more valuable because there's less competition on the market. And when buyers have fewer options, they're likely willing to pay more for a premium for your property. But here's the flip side. If mortgage rates do go up, fewer buyers will be able to afford the high home prices. And if the economy takes a hit from all these tariffs, well, then buyer demand could drop, which means today's hot seller market might not last forever. So if you've been thinking about selling, you might not want to wait too long. Right now, buyers are still out there and prices are still strong. But if these tariffs trigger a slowdown, well, that could change fast. The Miami real estate market is at a crossroads. If tariffs continue to drive up costs, we could see home prices climb even higher. But if they hit the economy hard, we could see fewer buyers, higher interest rates, and a potential market shift. So what should you do? If you're buying, you're going to want to act strategically. And if you're selling, don't get greedy with the offer that you receive. And if you're investing, well, stick around for the next section because there are opportunities if you know where to look. All right, we talked about buyers and sellers, but what if you're an investor? Whether you are flipping homes or you're buying rental properties for long-term appreciation, these tariffs could create huge opportunities if you play your cards right. First up is the rise of the rental market. If new homes become more expensive to build and mortgage rates start creeping up, what do you think happens? More people get priced out of buying and they are forced to rent instead. And guess who benefits? Landlords. The rental market in Miami is already red hot, and with fewer new homes being built, demand for rentals is only going to increase. If you own rental property in Miami, these tariffs could actually work in your favor because as home ownership becomes more expensive, rental prices could skyrocket. Now, this is where things get interesting. Miami's high-end luxury market might slow down because wealthy international buyers, many of whom invest in new construction, could start pulling back if costs rise. But on the flip side, affordable and mid-tier housing, the stuff that's always in demand, could become a gold mine. If developers aren't building enough new homes, existing properties in this range will become even more valuable. If you're an investor looking for the biggest upside, here's where you should be paying attention. You should be looking at multifamily properties, because with more people renting and housing affordability getting tougher, multi-unit properties are going to be more profitable than ever. Think about it. If the demand for rentals is up and interest rates make single-family homes harder to buy, small apartment buildings, duplexes, and triplexes become cash flow machines. And the million-dollar question, should you invest right now or wait to see how the market reacts? The truth is, it depends. If you're playing the long-term game and looking for rental income, now is probably the perfect time to buy before prices climb even higher. But if you're banking on short-term appreciation, you might want to keep an eye on economic trends, because if those tariffs trigger a slowdown, there could be better deals on the horizon. Here's the bottom line. These tariffs are making new construction more expensive and slowing down supply. That means demand for existing properties and rentals is about to explode. If you own a property, you're in a strong position. And if you're looking to invest, focus on rental properties, mid-tier housing, and multifamily units, because that's where the biggest opportunities are. But what happens next? Will these tariffs actually last? Could they get worse? And how will Miami's real estate market respond in the long run? In this final section, I'm going to be talking about what's really coming next and what you need to look out for. All right, I've broken down how tariffs are already affecting Miami's housing market. Higher construction costs, rising home prices, and a rental market that's about to get even more competitive. But what happens next? Well, no one has a crystal ball, but here's what the data and history tells us. First, let's talk about policy. These tariffs weren't designed to be permanent, but let's be honest, they rarely disappear overnight. Even if a new administration steps in, revising tariffs is a complicated, drawn-out process. That means that these cost increases could be baked into Miami's housing market for the foreseeable future. So if you're waiting for a rollback before making a move in the real estate market, you might be waiting a while. Now, what about home prices? Right now, all signs point up. Supply is tight and construction is slowing down, but here's where things get tricky. If the broader economy slows down because of these tariffs, we could see buyer demand drop, which could finally cool off Miami's overheated market. That means if you're a buyer, your best bet is to lock in a deal before interest rates jump. And if you're a seller, you might want to list soon sooner rather than later, because if demand starts to fade, prices could stabilize or even dip down. And then here's the wild card: interest rates. If tariffs fuel inflation, the Fed might want to raise rates to slow it down. And when that happens, we all know that mortgages get more expensive, meaning buyers qualify for less of a home. If you're thinking about buying, this is something to watch closely. If the rates climb, affordability takes a hit. But if the economy slows, the Fed could hold off on raising rates or maybe even lower them. It's really a delicate balance. Miami has always been a magnet for investors, domestic and international. But if tariffs drive up costs too much, then those foreign investors, especially those people from Latin America and Europe, they might start looking elsewhere. That's something to pay attention to. If international money pulls back, high-end condos could see a slowdown, which could create opportunities for local investors to grab properties at a discount. All right, let's recap. These tariffs are shaking up Miami real estate in big ways. If you're a buyer, don't wait too long. Prices and interest rates aren't on your side. If you're a seller, capitalize on demand now before uncertainty creeps in. And if you're an investor, follow the money. Rental properties, mid-tier housing, and multifamily units are the smart bets in this new market. This market is changing fast, and I'll be tracking every move so you don't get left behind. Make sure that you're subscribed so you don't miss the next update. And if you have any questions, drop them down in the comments. Thanks so much for watching, and I look forward to seeing you in the next video.